Gevo's price action is very confusing. It has been trading almost sideways for 2 days. So the question is, where is Gevo heading? Let's find out. Welcome back for another Gevo technical analysis update. This is Dr. B on Webull, and I will be explaining where Gevo is heading and what is a realistic price range that we can expect. Before we start, I would like to remind you that we have a live stream of Gevo and other stocks every day from market open to market close. The nice thing about this live streaming is that you can see the price with overlaid technical analysis support and resistance levels. At the same time, we are chatting and discussing ideas on the newly created Discord server with a dedicated channel for Gevo. The invitation link is in the description below. The channel will be troll-free, and our goal is to make it more informative and constructive compared to the comment section in Webull. Alright, so enough me talking non-technical nonsense, and let's technically analyze Gevo. Everyone investing or trading Gevo knows that we are due for a healthy pullback. Pulling back is not a reversal, it's not crashing. On the weekly, as we said before, the morning doji star, which is a bullish 3-candle pattern, was correct. And we currently have a big green candle this week that is setting a new 52-week high of 3.12. This means that Gevo over the last 52 weeks did not close above this price. And that will be somewhere here. Alright, so let's check the indicators. The super trend is going up. This is good because this indicates a bullish trend, not ranging. We are still above the IC cloud, of course. EMAs are looking great, gaining higher slopes, and the 13 EMA just crossed the 50 EMA. Now it's the 20 EMA's turn. We are pushing the upper boundary of the Donchian channel and the Bollinger Band. In fact, we have been trading above the Bollinger Band for a couple of weeks now. This usually means we are due for a pullback, which we know. The pullback doesn't have to be dramatic. It can be graceful, especially when the rise in the price was actually justifiable. But also that doesn't mean that we have to pull back now. Here is an example of a stock that has been pushing the upper bands of the DC and the Bollinger channels for a while. The DMI looks great. The buying pressure continues to increase, the selling pressure continues to decrease, and this trend is having a high momentum as indicated with the high value of the ADX indicator. Let's now have a look at the daily chart. Again, the super trend is rising. The conversion line in the IC indicator is moving away from the baseline. Green cloud is still forming. The RSI is still overbought, but not as high as the one we had before. It doesn't mean much, but it can be that we can go a little bit higher, especially that the RSI is gaining some slope, but again, that is not a guarantee. Now the EMAs look beautiful. Although the low EMAs are losing slope, which means the trend is slowing down a little, the high EMAs are actually gaining slope, which is something that you want to see. So again, we are pushing the boundaries and the expected pullback hasn't happened yet, except that it may be actually happening now. So the one indicator that makes me feel that the pullback has already started today is the Donchian channel on the daily. It's showing that today started to detach from the upper boundary of the channel. This usually means we are pulling back. But how far? In a bullish trend, it usually pulls back to the middle line, which is the blue one here, and this line is at 2.3. But we don't have to drop to 2.3 tomorrow. Here is a case where after detaching, Apple continued to push the upper line. This brought the middle line up and then it eventually pulled back to it. So that is something to keep in mind. Now let's overlay our drawings to see what to expect. You can see that the upper line in the DC indicator is aligned with the inner resistance of the channel and the 61.8% Fibonacci extension level. This is the level that rejected us and we are dropping from right now. The middle line of the DC indicator is aligned with the inner support and the 50% retracement level. So for now, we have two options. Either push further a little, pushing this upper band higher and bringing the middle line higher because we know we will eventually drop to it in the near future. And the higher the better, of course. Or we will drop tomorrow, not to the middle line, but somewhere near the 23.6% Fibonacci retracement at the 2.76. align perfectly with the median of our channel or break it and drop to the 38.2% Fibonacci retracement at 2.539. Now, if it gets really bad and this continues to drop, we may drop to the 50% retracement level at 2.37, in which case it will close the gap created on the 21st. But that would be a very sharp drop, and this kind of a handle of a cup is not nice. To decide what's going to happen, let's look at the smaller time frames. Maybe we will get a clue. Look at that. We touched the middle line in the DC indicator on the 4-hour chart with an extremely strong rejection of this lower price, and now moving up and haven't reached the upper line yet. So this looks very promising. Same thing with Bollinger Bands, and the EMAs are looking good. Also, the RSI is below 70. On the hourly, the same thing, we even bounced off the super trend 2 days ago. So the two theories of going up or dropping can be represented with the following patterns. If we are going up, we have this pennant that shows a drop in the pre-market followed by a breakout, maybe another drop to retest the resistance of the pennant, and then push all the way to 314 or even above to 3.5. If it breaks down, however, we consider the falling wedge, which will still drop to the same level of the 2.77 or 2.8, and then bounce back up. So if this level doesn't hold, we are heading to 2.55. So these are the levels that we should be looking at tomorrow. And if you found this video useful, please help the channel by hitting the like and the subscribe buttons. Also, do not forget to check the link to the Discord channel in the description below. Thank you for watching and happy holidays.